We're back with breaking economic data. The U.S. economy added 209,000 jobs in June, which was actually less than expected. Meantime, the unemployment rate cooled slightly to 3.6%. Here to make sense of all this is NBC News business and data reporter Brian Cheung. So, Brian, typically it seems we've been beating expectations. Not this time. Help us break down the numbers. How do they compare with May, and where are we seeing the most gains and losses?
Yeah, good morning, Joe. Not this time did we beat estimates, but it's still a positive number and shows that the jobs market is continuing to chug along and adding payroll gains for a lot of Americans. So as you mentioned, 209,000, that's how many jobs were added in the month of June. And that is indeed a slower pace than the 339,000 that we saw in the month of May. The government actually revised down that number as well. So even that May number wasn't as hot as we thought. But look, the unemployment rate is still very low, 3.6%. And for context, 3.5% and 3.4% were essentially the lowest that we've seen in over 50 years. So the labor market still looks very good, and unemployment remains very low. Now, the next natural question is, where did we see the jobs gained in the month of June? If we take a look at the sector by sector breakdown, you can see that in leisure and hospitality, I'll write this down here, we added 21,000 jobs just in the month. So bars and restaurants continuing to hire at a very healthy rate. And then we also saw professional and business services. There's more white collar jobs inside the cubicles, perhaps adding about 21,000 jobs in the month as well. So maybe in the tech sector, for example, where you might see some of those jobs, the bleeding perhaps stopped. But I want to point out, not all good retail trade. These are jobs at the mall contracting, interestingly, in the month by about 11,000 jobs, showing how there could be some weaknesses in this labor market. Although, again, overall, Joe, good to see that there's that positive number in terms of the amount of jobs added in the month of June.
Exactly. So one of the big questions now is the Federal Reserve meeting at the end of the month. They've been trying to strike this balance, cool the economy, but not go into a recession. So what could this report mean for plans to raise the interest rates or not raise interest rates?
Yeah, again, the Federal Reserve, which has been raising interest rates, that they're the reason for why your mortgage rates, your car loan rates have gone up so high. But even though they're looking at the jobs numbers and going, OK, well, that's a good thing that unemployment remains low, this is the figure, Joe, that they're going to want to be looking at very closely. Average hourly earnings growth. How much more are people making this year compared to last year? In May to May of last year was 4.3%. This new jobs report told us that wages rose by 4.4%. Now, that's probably a good thing if you're looking at your paycheck and saying, OK, well, my boss is giving me a little bit more money. But consider that inflation is still really high. So, again, it's not necessarily the case that your wages are keeping up with inflation, which is the reason why the Fed is likely to continue to raise interest rates to get these two things back into balance.
So bottom line, what does all this mean for everyday Americans who are managing their bills, trying to pay their budgets?
Yeah, well, what it means is that, again, inflation does remain high. You probably still have your job, although it depends on maybe what industry you're in. But for the Federal Reserve, again, interest rates are going to remain high. Don't expect to see mortgage rates come back down to 3% anytime soon. It's still going to be very, very expensive, Joe, to borrow.
All right, Brian Cheung breaking it down for us. Thanks so much.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.